central banks around the world are keeping interest rates very, very low. And for conservative investors that are not so eager to take investment risks, this is important because it means that they don't have so much capability to grow their capital. Now, women are part of this rather conservative investment group. Our study has been building on the data, the observations that we are making, and across all age groups, women tend to have less risk tolerance generally than men. This is particularly the case around the 30s to 40s for women, by the way. In their younger years, they're much closer in terms of their risk profiles. And so very naturally, women, when they're being advised with a conservative risk profile, are tending to have more fixed income and income-oriented investment strategies. So when there is no interest and there is no yield, as we are having now and probably for years to come, then it is very difficult to grow capital.
Nannette, I was looking through the various different categories and you broke it down by age group and the sort of strategies that women should be thinking of. And I'm considering all of my friends over the various years, and I don't think any of them would have had these strategies. They might have stumbled upon them by accident through a pension fund or maybe bought some property along the way. But you talk about it, the 20 and 30 category, retirement solutions, equities. Not a lot of women hold equities in that 20 to 30 range when they're starting out. Wealth management funds or discretionary mandates by 30 to 45. And from 45 to 60, you're talking about thematic equity funds, alternative investments, structured products as well. I really cannot pinpoint to any women that I know across the board who have these strategies.
Yeah, there's a real responsibility to start right away. I mean, especially when women are young, they're going to have a long lifetime. They are living longer than men. This is statistically, demographically a fact. And so there's a real responsibility also for financial institutions to participate, partner with education institutions, whether these are universities or vocational training, just to make women a little bit more familiar with equities. Equities are part of a well-diversified portfolios, and women will have, for their retirement purposes, to have such an investment in the back. It is the ideal time for them to get acquainted with equities, because what we have seen is that women in their investments are very underweight equities across all ages, but it's in the young years that they have the tolerance to typically start investing in equities. So that's a first key message. And then as they progress, indeed, there is the opportunity to adjust investment strategies also to the life cycle stages many women are in their 30s to 40s, where we note that there is a jump in the distribution towards less risky profiles as far as the investments are concerned. Women in general, or for a very large part, are starting to have perhaps some family commitments and responsibilities. They do have variations in their income. And so this is the ideal time to indeed tweak the investments towards something more stable that is typically diversified across several asset classes, but to insist also on the payout that women may want to have if their income from their professional activities in particular is coming down. And as they have more views, I mean, when you are like I am in the stage of 45 to 60, well, this is when, in general, convictions are forming. Women are very clear on what they want. They can also be a bit more sophisticated in terms of the assets that they hold. Indeed, there is, especially in a world without yields, there is a good reason to get familiar with structured products as well. And then finally, as you say, women are very affine with ESG, with impact. They think about the legacy, not only for their immediate family surrounding, but frankly also the responsibility more broadly. And there is a lot of interest for ESG-oriented investments among women that can help them also overcome some of the hurdles in equities.